The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And we're back. And boy, I'm crying in my soup. I should have listened to myself. Anyway, we'll get into it in just a minute. But I shall digress. And one of the reasons why is I'd been looking at a stock and I thought it was the best looking stock in the market. And I thought maybe it could even go up in a bad market. I am short for the most part. But I will have to kiss that trade goodbye. We'll talk about it. It disappeared in the den. Thank you for posting it there. But I've been looking at it. Almost bought it yesterday. So I'm going to have to say the fish that got away. But I knew you could tell someone was in it. We'll get into the charts a bit later. But it is that. I didn't buy it, so I will have to say au revoir to probably something that I saw coming. But I would rather be short today than be long. Anyway, this is your one and only Fuzzball, the cuddly, squeezably soft host here at TFNN. And, of course, as we start the day off, it hasn't been a mild day to the downside in the S&Ps. We're off 33 points. We were off down to 1812. And of course, Janet Yellen had been talking this morning, didn't do anything to change the tone of the markets from yesterday's drubbing. But to me, I just don't see any real into the downside until we have some kind of exhaustion move in this market. And these aren't exhaustion moves. I continue to see people trying to jump in ahead of the market and buy it. Every 10, 15 points down in the S&P, there's somebody diving back in on a grenade only to get blown up, the market to drift down lower. At some point, we're going to see severe demoralization, and that's where I will cover my shorts. But at this moment, just a lot of flipping around this way and that way, and we will continue to see how this does. Now, of course, there's been some very interesting moves in the European banks. Looks like we've got the EU coming in once again today, trying to put a bottom in those stocks where there should not be one. And what else can you say? My guess is that we are going to see some major move, maybe this weekend, maybe on Monday, from China to respond to the ultra-weak dollar. And I think we're forecasting that with the moves in the market now. I would say that there's a better than 50-50 action in this market. What do we have? We got 3.1 billion shares as we start the show. So this is a down move. It is on big volume. I don't know if it's on big enough volume to blow out all the lows. There's some stocks are bottoming now. But as always, we meet here between 2 and 3 p.m.
The following takes place between 2 p.m. and 3 p.m.
every day. They just have to stick that in back there at the engineering facility at the TFNN Tower in downtown Clearwater. But let's get the party started.
And it's all just a little bit of history repeating.
It is history repeating. In 2000, Pets.com goes public on the NASDAQ at an initial price of $11 per share, in an early warning sign that the internet bubble may be about to burst. The stock barely budges in the first day of trading. The stock peaks a few weeks later at $14 per share. Less than 9 months after its IPO, Pets.com announces it will shut down its operations, and by year-end 2000, the stock has fallen 99.1%. And the only thing I can say is how many IPOs over the last year or 2 years are going to do the exact same thing all over again. They're going to Ralph all over the market, and we're already seeing some of those kind of move back down. As we are off 32 points in the S&P, some very interesting conversations in the den today. I actually texted and emailed Mr. Andy Heck, who will be on, I guess, at 5 o'clock. And I had a suggestion for one of his Seeking Alpha articles, and that is who files first. The number one loser for most of the day for the stocks that were moving that I saw was Peabody Energy, BTU, of course, a big gas firm. And, we've got a very cold weekend. In fact, it's cold down here in Florida. This is the first day in a while I'm not even making sun tea. And I know you guys all think about how, that affects me, David White. And I want to thank you for that. But, of course, some of the smaller, lesser people up north, they're going to be cold. But my guess is this is about as good as it gets for demand on natural gas. And what's going to happen later? Oh, Andy's in the here. The shippers will file first, he says. I'm sure he'll talk about it on Tom's show when he comes back in and on his show on 5 o'clock. He's typing at me vigorously. And, of course, he's got a big announcement, I think, coming next week here. Maybe he'll bring that up on Tuesday's show. But it's hard for me to see anything in natural gas before August. And the heat's, and when the heat gets as high as possible. But until now and then, for the most part, demand is just going to go down. This is most likely the last big winter storm. If we got one more, it would probably be in March, but it's not going to be anything like this one where, a quarter of the United States is at 0 degrees, whatever this weekend. At least that's what I saw yesterday. I haven't looked at it today. But looking at stocks like Peabody and other stocks, Andy's throwing comments in from the peanut gallery. He wants Triumph, the insult comic dog, for president, which we talked about yesterday. But anyway, who files first? Just a thought. We will get into what I was crying about just because someone put it in the den. I've been stalking a stock for a while just because it was one of the best looking stocks in an absolute horrible market. And there was a floor under this thing at $18. And of course, somebody posted right in the den. I was looking at it this morning. I still couldn't buy anything in this horrible market. There will always be stocks going away. But one of the best patterns I've ever seen in a market is exactly what you're looking at in the fresh market. This thing just popped, I guess, in the last 15 minutes or something. They're going to get bought out. But, man, is this a powerful pattern. And if you've seen it before, it's usually a good sign that there is someone underneath it buying away. And we're looking at the fresh market, TFM. I've had it in the newsletter for about 4 or 5 days. And I said, man, this thing looks good. We bought it. I got out of it because the market looked pretty horrible on the bounce. And it still looked good yesterday. I mean, I was looking at this thing this morning, almost could pull the trigger again. We'll talk more about this, what I call the Lazarus pattern, when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And a lot of discussion about fertilizer in the den right now. And I'll put a link here to Fritz Haber, who's actually the guy that I think he won a Nobel Prize for it. And of course, really changed the world and being able to grow enough food for everybody. Unfortunately, he was a real German and decided to make chemical gas weapons in the very late part. Well, I think about, 1916 through 1920. Yeah, it's a kind of a double-edged sword there. Yeah, you fed the world and you came up with chemical weapons. On balance, probably more people lived longer. But kind of the yin and yang of chemistry out there with Fritz Haber. We were talking about the fresh market before we left, and of course they're getting bought out. But there is a very big pattern. I just couldn't buy it because I almost bought it yesterday morning. Didn't like the way it was acting. Whole Foods was reporting after the bell last night. They kind of disappointed. That's where this thing came down this morning. I looked at it again, and I just could not buy anything or go long with a market that would look like it could blow chunks at any moment. But, man, this is a good pattern, even in a bad market, to watch. But what you want to see, I call it the Lazarus pattern. Tim Ord showed it to me early on, but he never really had a name for it. I gave it back from the dead because the stock does look like the thing is just totally dead. But if we can think of the volatility we've had in this market over the last week or 2 weeks to see a market go sideways like that, there is somebody underneath there that has a bid on this stock. And as soon as it goes up, they quit buying. But that generally is a great indication that there's something going on in that stock. At highs, of course, distribution. At lows, accumulation. But we're in a lot of things that I thought were not risky enough or were too risky to buy. But, man, if there was anything I was going to go long, it was going to be this stock, and that was the fresh market. There was something in that chart. If there was one chart out there that looked fairly decent, that was it. Oh, well, I'll have to put that in the other ones again, that I could not, I just couldn't stomach going long here with a market that I thought was probably going to close below 1,800 on the S&P cash. But a good indication, and I'll name that the Lazarus pattern. If anybody's heard anybody else ever bring this up, then email me. But I've never actually heard anything. Only one person that kind of vaguely referred to this thing and without a name. Maybe he's come up with a name in the last few years or something, but I never heard it. But a great one I call the Lazarus pattern. And that is just, you get about 7 to 10 days into these things, and it's still, especially with the volatility, and you're looking for literally a stock that can go nowhere. It can't go up and it can't go down. And that is a very, especially in a down market, is a very good indication that, well, it doesn't go up, so they're not bidding the stock up. But every time someone is there with a sell, they're more than willing to buy the stock on the opposite side. And, of course, the opposite at highs in a market, a very good indication that someone's getting in or out. But if you want the poster child for accumulation and that something is going on in stock, this is a very, very good one. Now, expand that to about 10 years, like gold did in the 90s, and you've got an excellent idea of just how powerful stocks are that just consolidate very tight ranges. Now, stock like this, 10, 15 days or something, you're going to get a fairly decent bounce. But if Whole Foods wasn't out there, I probably would have bought it yesterday. But I may have even sold it this morning with as nasty as this market is looking. 1816 on the S&P cash. And I don't know what else you can say about it. Wasn't anything else I was going to buy. I've been kind of fixated on this thing for a week. But just because of that one pattern. If you want to, or have a question, you can email me at path@tfnn.com. You can call me at 877-927-6648, or you can put a message in the den. Somebody's, they're coming up with different names here. I'm getting a few in the emails, some that I cannot repeat. And here's one that says a General Franco pattern. I don't know about that. El Stabilo, huh? I'll have to go, trying to remember Franco. Spanish, right? A little Spanish lingo there. Of course, we've been down to 1812. We're probably going to test that in the next few minutes. We'll look at it. We're closing in on 3.3 billion shares on the New York Consolidated Tape. So there isn't a lot. But we've got a ton of stocks going on. Oh, dead dictator. We've got a lot of stocks out here. We want to look at some of them. Of course, we're starting to break out some very important moves to the upside in some of these stocks. Look at AEM up 8.3%. It is breaking through the May 14th high that had 2.9 million shares with 4.5 already. We'll just go through these as fast as we can because there's so many of these stocks that are moving. Anadarko Petroleum off 6.5% today. I don't think there's anything out here that doesn't say that you retest that January 20th low at $28.16. It's got, 8.4 million shares already. Pretty good. But if you were looking for a bottom, you've got to wait for 28.16 on this one. AVNW, which is Avat Networks. Don't know this stock. Don't care to know it. Doesn't have a lot of volume. It's being excommunicated from my list. Avon Products, another one out here that doesn't look like going too far. Yeah, it's just going to die again here. But Avon Products looking like it's circling the drain off 15% here today. Of course, we've got a little bit of news out here from the Boeing company about their books. And I'm trying to remember, I'll look it up during the break, but there's a pretty famous quote that I love about all books are either gently roasted or totally fried. I'll look it up during the break, but I love the way the guy said it. Just kind of hard to think that Boeing would actually cook the books. They all do at one time or another. The question is it just gently roasted, or is it totally a bunch of ash? Well, we'll find out soon enough. At least that's the rumor. Down on volume. It's at least getting back to this volume here on January 27th. As we said, a lot of these stocks have come down to these lows, and then there's been no volume, and then they just jump the creek and they get a lot of volume. And this pattern has been persisted through August, where it actually started a great deal in the energy patch. And I just continue to see that pattern, which is normally, you get down there and there's no volume, you want to buy it. But I've seen nothing that says that that general pattern in the market does not continue. Bank of America Corporation is off, what, 1.5% today. It's broken through its little congestion lows down to, what, $11.11 today. Is that right? 11.07 right now. 240, is that right? 240 million shares? Is that right? Yeah, 230 million, 240 million shares. So that's moving on. I don't know if there's anything else out here to save it. Of course, everybody's scared and wetting their pants on the fear that Janet Yellen will do negative interest rates and decimate the banks like they have in Europe. In the meantime, call me at 877-927-6648. Email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And something across the transom, as they like to say. And maybe this is my comment about, I don't know if this is the same guy that posts in the den. It could be, about you don't believe anything until there's an official denial. Timeless U.S. data shows economy not at risk as stocks crumble. So, and That's normally a good time to run the other way. When they tell you not to panic, it's a pretty good time to panic. Had some other questions out here. We're going to try to get to them. Probably the first one is we were talking yesterday about using options. And one of my comments that this is a good month to actually show this off. And that is a lot of people, I guess I didn't, because there hadn't been a good month to do it, why it was happening. But if we look at our options, it would say, man, we're going to have such a run up to the high side. We're basically 100 points below where Max Payne is in the SPYs. And actually 10 points in the SPYs, about 100 points in the S&P cash. And, it would all look like, that's something that we should be doing out here. The market's going to rally. Now, do I think they could go up significantly before the end of next week? I think they can. But one of the things that I think escapes a lot of people is when you're way out on one of these sides, options act a lot more like gravity than they do the strong nuclear force. And that may be kind of in the weeds for people that aren't into a lot of physics. But I'll try to put it this way better. And that is that options kind of act like gravity. And that is, if they're real close, then there's a lot of it. If you're pretty far away, it's pretty weak. Gravity works on the inverse square law. And that is, of course, you go out 10 miles and then you go out 20 miles. The 120 miles out is going to be basically the square of the 110 miles out. So it has kind of a bell curve on the edge. The farther you go away, the more and more dramatically it fades. So you want, when you're looking at those curves like we're showing, do I still have it up there? Yeah. Like we're showing on the SPYs out here, when you're 100 points off on the S&P cash, you're way out. You really need to start seeing some movement in this in the next couple of days. Could we get to 1900 on the S&P cash after hitting something like 1750 next week or 1770? I think the answer is yes. But now, is it going to come from something like the Fed doing something, or China doing something, or just a spite of good news, or just rainbows and unicorns descending all over the United States to make everybody feel good? I don't know. But for the most part, this is not where I'm starting to bet lots of money on options, or this is going to be a great predictor. If we were like 50 points, 70 points off, I can still see it. But generally, when you're this far off, the effect of options is extremely weak. It's not as strong as everybody would think when it's on a full-blown market. So be very careful of using this month. And, of course, this kind of happened last month, too. Be very careful of it. Now, normally by the third month, you get a pretty good fix on it, and you can get one. I'm not saying that there won't be some good, maybe Wednesday, Thursday, Friday move to the top. But right now, everything says to me that we'll continue down at least into Monday. I think China has to reopen, and China has to not drop the Baby Ruth in the punch bowl by doing something wacky with their currency, like maybe drawing mustaches on Mr. Mao or something. There's got to be kind of something weird going on out there. But everybody's scared. They know that China's probably got to do something with the huge move in the dollar. Certainly, Japan is susceptible to also doing something. And I think the weakness you're going to see into this weekend is a belief that Friday at 4:30 that we're going to hear something from the Chinese or the Japanese or the whole Asian industrial complex. I'll paraphrase our president in the late 50s. But that's it. Anyway, we're off 38 points in the S&P cash. We'll go back to something else out here in it. Oh, I had somebody asking some stuff up here during the day. And thanks on LinkedIn. I'll look through the rest of it. Yeah. Any thoughts on LinkedIn? Yes, LNKD. LNKD. A lot of people are still very confused on how LinkedIn makes its money. And LinkedIn basically sells a list of people that are on their service for headhunters and companies that want to find people that have very specific skill sets. This would pretty much say that it's going to be very difficult for hiring over the next 6 months to 9 months. But, this has got to be, I think you got to look at LinkedIn as much more of a company that is like Monster. I think it's a Monster Worldwide now. Did they change their name to that? The other company that was kind of the headhunter business. LinkedIn is kind of hit its height. I think you can probably extrapolate that into Facebook also. A lot of people I know, especially with kids, are telling me that Facebook may have hit its high. Everybody wanting to use Snapchat and other things a lot more than Facebook. So we may have hit peak Facebook. These things are trendy, especially when they are so used by kids. But LinkedIn didn't hit its mark. Everybody thought it should grow a little bit more. It's doing kind of well in China. But basically, they give you all the free stuff so that they can sell you to somebody else if maybe you are, maybe you got a very specific skill set. My guess, in fact, I'm writing an article tomorrow for the Tech Insider about computer learning. And right now, if you want to make more money than just about anything else you can do, if you are something called a data scientist for computer learning out of college, you can probably make about $500,000 a year. There are a few places out there that if you have the statistical background, if you know how to write some code, you can make monster money. And that is one segment right now in computer learning that's all about. But there is a great deal of that kind of stuff behind both Facebook, Google, and others, LinkedIn too. But I kind of think that the whole social network thing may be kind of like iPhones. It may be in its mature business part of it. But I would say that for LinkedIn to come back, you need to see some kind of hiring in the upper parts and not hiring at McDonald's. Because what these guys do really is sell people with very specific high-end skill sets. And my guess is that LinkedIn probably does a good job selling a data scientist right now. Other people in different, even probably high-end skill sets like programmers, probably not so much. Anyway, back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We're going to look at a few more out here. And Barclays, another day down. I don't see, we talked about this yesterday when we were talking about a lot of the European banks. There's literally nothing out here that tells me any of these things have bottomed yet. Barclays, let's get a read on it. BCS, right? Off almost 7%. We'll just call it that. Not a lot of volume out here, but these things are just gapping down day after day. And of course, we saw more intervention in Europe today in the banks, but Deutsche Bank down still. Just wondering how much it would be down if the EU wasn't trying to support it at some level. It's off 5% today. But again, none of these things have broken these trend lines to the downside, so I can't see it. Now, somebody in the email made a very good point that I didn't put a fine point on in my discussion today, and that is that the U.S. markets will be closed when China comes back on Monday. And that's what I thought. Maybe this would be the weekend. If they were going to do something, it would make a lot of sense, because guess what? It gives us an extra day on this side, and it gives them a couple of days on their side when everybody shows back up to the market. But that's why I think we're probably going to see a down market into Friday's close. A lot of people probably don't want to go into a 3-day weekend on a lot of losing positions. And of course, if China does something, we're going to not be able to react to it until Tuesday. So it makes both up and down markets tough. But you know, markets can bounce a little, and they did off of the lows out here. We're at 1825. But I just don't see going into a big 3-day weekend where we don't continue this sell-off in some fashion tomorrow, unless we get some kind of big news out of the Fed. But it's tough for me to believe that that is coming. Other stocks of interest out here that are blowing up to the downside, Bunge Limited. This thing kind of pretty much hit its highs when it bought out some of its fellow companies over the last year or two. It's been nothing in one ABC after another. Looks like it's maybe completing one down here today at 46.77. But of course, it's off, what is it off? 20%. Today, the energy is more on the way down. Don't expect any kind of V bottom on these things. They're going to have to go sideways for a while. BIG out here, and that's Big Lots. It's come back and filled its gap a couple of times. It's down fairly significantly, off a percent. But I don't see anything else that says it doesn't come back into this giant gap once again. To see what else do we have out here? Brubaker, BRKR, Bruker, Frau Brucker up very strongly today, up 7% on a fairly bad day. It's given back a great deal of the pop it had this morning. It got back up to the previous highs within about 30 cents or 24 cents of the December 30th high with a lot of volume, but gave it about back about half. And I don't know if you can say anything other than that or read anything into it. We talked about how natural gas just looks more horrible each day, and nothing looks like there's going to be anything to actually handle or help it coming into summer, other than people it is so cheap they don't even bother sending it out. Now, I don't know if this passed or not. One of the things that the Obama administration had talked about was not letting them flare any of this gas, and that may just make a great deal more of this problematic. I don't know if that was in the thing that got tossed out yesterday in the Supreme Court. It's not like I'm going to be shorting a $2.15 stock, so I didn't spend a lot of time going after that. But the inability to flare a lot of that gas may even mean that they're more than willing to shove that gas down the line. You know, we might even see natural gas at half the price if that whole EPA issue with flaring unwanted gas continues to be pushed. So it may get a lot worse before it gets any better. Some of these stocks that have bounced off a little, like Quarterly, up fairly decently today. CD up 15%. Now it's a $2 stock, but it's at least back up to the level where it started going back down on the 4th of December. You had 2.6 million shares that day. It grew it today with 4.5 million shares already. Cisco leading the band on massive buybacks has popped up fairly well today, up up 10%, which is pretty good for a company like this. They've retired a great deal of the stock that they pushed out in 2000. At one time, there was a share of stock for every man, woman, child alive in the world. They've been slowly buying back that stock to get rid of the huge overhang, and it's kind of helped. Of course, they're buying more back, and that's going to pop the stock up. Imagine that these buyouts will continue for years to come, as the current CEO who's leaving, if he hadn't left already, is going to want to cash out his shares as much as he can. So that's it. Anyway. Okay. I'll see if there's anything else out in this. I mean, you're back up to this gap where this thing kind of gapped down on heavy volume. What do you have that day? 64 million shares on the 15th. You're up on 69. So you're kind of through that. You got two more gaps to go. You could kind of say that this is a three-gap play to the reverse, and you might even see Cisco up to $27, whereas that first gap down on the smaller one. DB, we talked about that. I don't think there's anything more to say about it. To Diebold, of course, these guys make all the ATMs that will one day rule the world when they become self-aware, and Skynet and the Terminator and all that kind of stuff. But with banks doing bad, they're not buying a lot of new ATMs. And Diebold, why not being able to fix the votes anymore, and the ATMs down, it's broken its previous low of January 20th at $23.95. 720,000 shares, 920,000 shares today. If you missed it, that is some sarcasm. Seemed like everybody I know with conspiracy theory has something to do with Diebold. Expedia, nice bounce up. A lot of things making this a very, very, basically one-way trip from $140.51. You've got the little mosquito virus. You've got people getting sick on ships. You got literally everything going against it, but that's probably what's going for it right now, as we had too many shorts in this. And if they didn't totally, hugely disappoint, you get a bounce in these stocks up to 104.95 today. I'd like to see this thing drift farther higher. My guess is that travel will not get any better this year, and this is probably going to start making some ABC downs. Dropping the chalupa today is Flower Foods. This is off 20%. It's blown through some previous extended lows. What else do we have? Anything else? Yeah, we'll go back and look. How are we doing on the S&P? Oh, nice pop. We're only off 22 points on the S&P cash now. 3.6 billion shares. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as always, we're brought to you by Cyberdyne Systems. A few people might get that inside the Terminator reference. 3.72 billion shares. Again, another huge day. And of course, high volume lows are never a low until they get retested. So what are we going to know today is that I think we've got enough volume out here that we know we're going to get this low retested once again. And the question is whether it's retested before the end of the day or tomorrow. But I'd have to say that going into a 3-day weekend, going to be kind of tough to keep a lot of people buying this. But anyway, I would look for more action like it tomorrow. Yes, Skynet. Other stocks of interest, Goldman Sachs, again, some of these others that have been sucking wind, as they say. Where's my Goldman Sachs here? I don't have it on that list. But down today, should be on this one, right? GS. Oh, there it is. Off 3.5% at 141.90 still today. This thing hasn't broken any kind, or even close to breaking any kind of the downtrend this has had since November 9th at 199.90. So at least maybe on short term, maybe we get some movement in this market. But for long term, I really don't see a great deal out here other than market gas from time to time. And that's it. Let's go to some stocks here. We only have a few minutes left. Check my email. Per CNBC, OPEC is going to get together and talk. It's for real this time. Okay. So that's why the market's bouncing. Thank you much. I don't know who is that from. Okay. Mr. Ocean Message. I don't know who it's from. I guess that could be a likely explanation that somebody's getting it together. HNI Corporation. Let's take a quick look at these guys. HNI, it's just off 1%. Let's take a look at HBC, which is the next one out here. Another thing, still nothing in the financials that says any kind of low is in. Where are we at here? HBC off 3.3%, 4 million shares today. Not the volume it had a few days ago, up 7.6, but 4.8 is still pretty good today. We could get to 7.6 before long. iRobot out with earnings last night. Well, apparently it did not read Mr. Isaac Asimov's robot rules for not hurting people, because I imagine that if you own this stock, you are hurting it today. Off 13.5% at $28.64. We've got 1.3 million shares already. That's going into the August 26th low at $27.55 with 540,000 shares. So, you got to look at that and say, I got to like it. It's going to hit that 27.55. Maybe that'll act as the initial support level in this, but another disappointment and huge gap down with a volume. So we got a lot of no touchy stocks here for a while. Another stock that is not rewarding its holders is LifeLock. This thing gapped back up on a little better news back on the 29th of October. Today, the news just the opposite, down, but the volume nowhere close to where it was before. So maybe at some point this thing does level out, maybe $8 or $9, and maybe you'd be able to look at it there if it maybe if it does a fresh market, the fresh market kind of action out there as we talked about earlier in the show. In the meantime, sell when you can, not when you have to. Hang on for Tom O'Brien, and then Andy Heck. See you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.